Howdy folks, Dr. Jeff Camarda. This February 29th, a Thursday. So we're enjoying this Leap Thursday as it were. I'm joined by wife and partner Kim Camarda, of course, and Blank, one of our bright personal wealth advisors. As we promised in recent videos, we really kind of want to break up the team, let you see several of us, and and kind of make the information a little bit more high level, easier to digest, and more diverse. So one of the things I'd like to begin briefly with kind of a recap of Camarda's investment philosophy. And our job really, in our view, is not only to grow your wealth, but to protect it as well. And we use various investment methodologies that are designed to avoid, obviously we can't promise to, but designed to avoid big plunges and big losses. So the market, at this point continues to be very strong. And our portfolios, depending on their particular mandates, are pretty much fully invested, like Kim expanded on this in a second. The market is very much an uptrend. It's also widely viewed as being pretty much overvalued. An article in the Wall Street Journal this past week said that, or actually Barron's, that it's melting up. And the melt up is really not a sign of good value and sustained performance. So we look to try to ride these trends as long as we can, but to try to put protective measures in place in order to avoid big losses if that occurs. So Kim, would you like to expand a little bit on this in terms of what that philosophy is?
Sure. I mean, you mentioned riding the trend, and that's what the indicators are designed to do, to keep us on the majority of the trend, right? You can't get out at the absolute top and get back in at the absolute bottom, but this is designed to catch the majority of the trends. We have the long-term indicators and intermediate-term indicators that generally guide when the portfolios are in or out of the market.
Yeah, and we're looking at, when we consume an awful lot of technical information to make these decisions, but kind of high level, currently U.S. equities are in, I'm not telling you if you don't know, we're in bull mode. Canada's up, international is up, real estate is back in bull mode, bonds are going back up because of the expectation that interest rates will come down. We'll see what happens, but that's why they're going up. Gold's on the way up, as is energy. Other than that, natural resources are in bear trend and some other stuff. Did you have some observations from that you wanted to comment on also, Blake?
Yeah, I know one of the big things that's a lot of people are paying attention to is the Federal Reserve meetings and when they're looking to reduce the interest rates. And the forecast is right now that they're going to meet sometime in June or July to start talking about reducing rates. So that's something that we're keeping a very keen eye on and for our portfolios. But if you have any questions or concerns about your portfolios, please make sure to talk to your wealth advisor to address your concerns, and that way we may address those for you.
And also understand why your portfolios are configured the way they are, and to make sure those are still your wishes, and to talk about what potential adjustments are. And just a bit on the Federal Reserve meetings, right? One of the reasons the market has been screaming up last year and this year is because of the wide expectation that the Fed will cut rates. Whether they do or not is yet to be seen. There's a lot of opinions on either side, and that's going to be driven by inflation and the labor market, both of which came in hotter than expected, when in the most recent data. That's just because that's the expectation doesn't mean it's going to be realized. And if it's not, if they don't go down or if they go back up again because inflation's too hot, that could be a pretty specific market shock. But as Kim will tell you, that's one of the reasons that we read these tea leaves on a regular basis, is try to discern when trends shift and look to take appropriate action before it's too late. Right, Kim?
Right. It's not necessarily us trying to make a prediction, right? As some people are, this is, why is the market doing this? If they think the Fed is going to do that, it's not necessarily our interpretation of what we think is going to happen. That's what we're using the indicators for and the rules that govern the portfolios. So even sometimes that things seem irrational. Why is the market going up when it seems like it shouldn't? Well, it's best not to sometimes second guess that. That's why we're using the quantitative tools we have to just, work the system.
Good. And that probably is enough for now. So, please comment, by the way. So again, if you have questions, about how your portfolio is configured, why a particular strategy is in cash, is it because we're looking for alternative replacement stocks or because we have negative indicators for that particular area. And there are very sound reasons for these decisions, but please talk to your personal wealth advisor, Jen, Lou, or Blake, and they'd be very, very happy to explain it to you. And if we got to get in a call, Jeff or Kim, to get in deeper, we're happy to do that. And also some feedback as to whether you like this new video format. Jonathan is very learned. I like to refer to him as my smarter brother. But sometimes it's he's so educated that it's difficult to kind of express the concepts. So we're trying to make it a little bit more digestible. But let us know if you like what you see or if you any adjustments that you suggest. Yeah.
Absolutely, and I think we're going to take time during some of the videos to maybe break out what does a particular indicator do, or if we can go more in depth on rules that run one of the particular strategies and just break that out over time and have a featured segment on that to provide more clarity.
So for now, that's it. It's Jeff, Kim, and Blake saying thanks very much. Bye-bye.